Hi, this is Lara at Elliott Wave Gold with a trading room video update for you after the session for 28th of February has ended. I'm actually recording this video now, Wednesday 1st of March. It's now 12:20 AM Eastern Standard Time on Wednesday the 1st. I'm going to look today at copper, US dollar index and DAX. I'm not looking at DAX because it offers up an opportunity. I don't think it does. I'm looking at it because a reader has suggested it. Let's have a look, or rather requested it. Let's have a look at copper. Classic technical analysis first. I'll let that lead my analysis with Elliott Wave supplementary, mostly for invalidation points and for targets, but also sometimes helpful with direction. I like to use Fibonacci numbers for my exponential moving averages, and I use a simple moving average for the long-term 200-day moving average. Price is finding some support around about the Fibonacci 21-day moving average and a little bit above the Fibonacci 55-day moving average. That was the one that found support down here, so if price moves a little bit lower for the short term, look out for support at this moving average. We've got some longer term divergence here between price and RSI. While price has made new highs, RSI has failed to make corresponding highs. This is some bearish divergence. Copper had a pretty good trend, ending with a blow off top with a volume spike. We've got a long upper wick on this candlestick. It was very reasonable to expect some consolidation or downward movement after that. We got some sideways movement essentially for quite some time, although a slight new high. And while price reached that high, ADX reached extreme. It reached above 35, it reached above 50 up here, and it was above both directional lines. So at this stage up here for this blow off top, the trend was almost extreme, and it did enter extreme just afterwards. All of this choppy movement with an upward bias, quite choppy, not a very strong trend, has managed to bring ADX quite substantially down from very extreme. It's now just above 15. If the black ADX line again turns up at any stage, it would again now indicate the start of a new trend. The positive and negative DX lines are whipsawing about each other, so it's not telling us there's a trend, and if there is going to be a trend, it's not indicating which direction it's most likely to be. Bollinger Bands are contracted, ATR is declining to flat, so all of that together, these three tell us at this stage this market is probably not trending. So watch on balance volume closely. If it breaks above resistance or below support before price makes new highs or new lows, that may indicate the next direction for price. For the short term, this little pullback here comes on overall declining volume. So for the short term, at this stage, that doesn't look like the start of a new downward trend. But let's have a look at the next chart. Here I've got some simple trend lines. This is a weekly chart. This is all of the data I can get. I'm using FXCM data for copper. Going right back here, this is the first price point I can get. I've drawn a trend line from this high to this high. It was perfectly touched 3 weeks ago. So this trend line isn't too steep. It has a reasonable slope. It's only been tested a couple of times before. I'm not going to count these as tests, although price has remained below it for quite a long time. Because it's so long held and it looks like it's been perfectly tested again here, it does offer some reasonable technical significance. While price remains below it, I will expect this trend line to hold. If price moves above it, then I would expect it to offer support, but in the first instance, I'll be expecting it to offer resistance. I've drawn a support line from this low to this low here. That's been breached and price has turned around and come up to find resistance. Let's have a look at that on the next chart because that's shown a little bit better. I've drawn it from the low of this candle to this candle here. We had a strong downward day with some strong volume, a bit of a downward breakout from a little consolidation that may have been, and now price is curved around and coming up to find some resistance at this line. I want to go back now quickly to the classic analysis chart and have a look at volume for that, because I'm not really too keen on relying on FXCM volume data. For these 3 upward days, we've got small range days, and it's coming with some decline in volume. So this little upward movement in price does not have support from volume for the short term. And so this might be a little counter trend movement if we have a new downward trend, if this green trend line is going to hold, and if this lilac trend line has now been breached and is offering resistance. I would expect, given my Elliott wave count, a target to be at least somewhat below 1.937. That might be a little bit too optimistic though. When there's some structure to downward movement, I can start to analyse it and start to calculate a better target for you now. But for the first instance, that would be my expectation for downward movement for copper at this stage. If these trend lines hold, if this price breaks, particularly above this green trend line, then my analysis would be quite different. That's a very important trend line. While price remains below it, I'll be expecting downward movement. Let's have a look at the US dollar index. I'm looking at this one again today because I think it's offering a really nice opportunity. It's been moving overall upward as I've been expecting since back down here, or back about here I think. I've been expecting it to move up. I've published this one a few times before in Trading Room because I do think it is offering a good opportunity. We've got a crossover of the short-term Fibonacci 21-day moving average above the mid-term Fibonacci 55-day moving average here. That's indicating a potential change to a new upward trend. The long-term 200-day moving average for dollar index is still increasing, so we should assume that the trend remains the same, upward, until proven otherwise. These horizontal lines are showing where we've had past resistance and support, so that these may offer resistance again along the way up. But that might be a little bit premature because at this stage ADX is still below 15, and so that's not telling us yet that we've got an upward trend. This is a lagging indicator. It's based on a 14-day moving average. If the black ADX line moves up above 15, then an upward trend would be indicated because the positive DX line is above the negative. That's not the case yet though, so if we do have an upward trend, it's still in the very early stages. Slight cause for concern, ATR is still declining as prices started to move up. Now that can happen sometimes in the early stages of a new trend, particularly dollar index. It tends to behave a little bit like commodities sometimes. It has a slow start to its waves, momentum accelerates toward the middle as ATR increases, and it sometimes has blow-off tops or selling spikes. RSI is pretty close to neutral, so plenty of room to rise or fall. We had some single bullish divergence down at the last lows here, telling us that we should look out for a trend change back down here. That's what we've got so far. Stochastics reached up into overbought. It's come down a little bit. This oscillator can remain extreme for quite reasonable periods of time when dollar index is in a good trend. We had a bullish crossover back here from MACD. It's moving up into positive bullish territory and volatility is returning. So on balance, it looks like we might be seeing the early stages of a new upward trend. To have a little bit more confidence in that, I'd want to see ADX increase to 15. My Elliott wave count for this one sees an incomplete structure up for a fifth wave, which began here and is unfolding as an impulse, subdividing 1, 2, 1, 2, 1, 2, and now 3, 4. We need 3, 4, 3, 4, 5. So another couple of decent sized fourth wave corrections along the way up toward the final target. So this would be my initial target for the next wave up. That's what I'd be expecting. This chart is exactly the same as the one I've been publishing up to now in Traders Room. The only difference is the support line. I've slightly adjusted it. Previously I had drawn it from this low to this low. It's been overshot by the long lower wicks of these three candlesticks. This is why I'm publishing this dollar index again today. Look at the long lower wicks on these three green daily candlesticks and look how they are almost perfectly touching this support line. So this line's now been tested 4 times and the slope isn't too steep. Now it doesn't have good technical significance and so it might be overshot. That's the risk for this analysis at this stage, but this picture for the very short term here does look reasonably bullish for dollar index. This is my classic analysis of DAX, and then I'll get into the Elliott wave count. I'm noticing that it had what looks like a pretty good trend here. All of the moving averages have positive slopes, so we should assume that DAX is still in a bull market until proven otherwise. For short-term pullbacks, price is finding support around about the Fibonacci 21-day moving average, and for longer-term pullbacks around about the 55-day moving average. The 21-day moving average at this stage may be offering some support. We've got double bearish divergence at the last 2 highs with price and RSI, and after this clear upward trend, ADX reached extreme in that it reached above both directional lines, and so it was quite reasonable to expect some pullback. We got some consolidation here, and we're still getting declining ADX. So at this stage, there's no clear trend indicated for DAX, even though it has had a couple of higher highs and a series of higher lows. So it is still, by definition, in an upward trend. It's just not a very strong trend, and there's some signs of weakness here. Flat to declining ATR. After we had some increase with that last clear part of the trend, now it's overall flat to declining. That also indicates that we may be getting a consolidation or a pullback for DAX. And tightly contracted Bollinger Bands, that's not normal for a healthy trend. Let's have a look at I'll do some volume analysis first, because stock charts data, which I use for classic technical analysis, don't offer volume data for the international indices. So I'll be using some, I think this is again FXCM data. I've drawn a support line here and a resistance line here on balance volume. This is tightly constrained. If we see a breakout above resistance, that would be a very, very strong bullish signal. If we see a breakout below support, that would be an even stronger bearish signal. This trend line is almost horizontal. It's long held and it's been tested multiple times. So this purple line particularly has very strong technical significance. So I'd be watching that one really closely over the next few days for DAX. Recent days volume is strongest on downward days. That's also quite bearish, along with some neutrality in the classic analysis there to bearishness with RSI. This is my Elliott wave count. I started back in the 70s. This is as far back as the data goes I can get from FXCM. So I've assumed that we had a supercycle first wave off to the left of the chart, a second wave correction here, a third wave ended here, a fourth wave triangle. Now I've got two wave counts. The fourth wave may have been a regular contracting triangle, or it may have been a zigzag over here. If the fourth wave ends here, then we've got a fifth wave up at supercycle degree. Let's have a look at how this one might be unfolding. Beginning back here, here's the triangle. We may have had 1, 2, 1, 2, and now 3, 4, 3, 4, and a fifth wave at cycle degree beginning back here. I've drawn this McGee trend line around this bull market from the first two major lows within it and extended it on out. It's quite nicely showing us recently where deeper corrections have been finding support. This is still the monthly chart though, so this is not really that recent, but looking at the scale of this chart, this is more recent. If DAX breaks below this McGee trend line with a full, preferably weekly candlestick fully below and not touching that line, that would be quite a strong bearish signal from DAX. That hasn't happened yet, so in the first instance, if price comes back down to touch this trend line, I'd expect support there. It's a bit concerning for the last couple of months. This one isn't complete yet, but for these 2 months here, it's quite concerning that we've got rising price on declining volume. The fall in price for rise in price for these 2 months is not supported by volume. For a bull trend particularly to be healthy and sustainable, it should be supported by volume. For price to keep rising, it needs the activity of buyers to push it up. That's not quite the same for a falling market, because the market can fall of its own weight, and absence of buyers can achieve the same outcome as an increase in sellers. But for price to keep rising, we really do need an increase in activity from buyers, so more volume. We don't have that for these 2 months. So it'd be quite reasonable to expect some pullback and some consolidation about here from DAX. Let's have a look at the weekly chart. I think we're going to start with this cycle degree fourth wave. No, we're going to start with the whole of supercycle wave 5. So this is why I've got 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, and the fifth wave beginning here. So far within it, 1, 2, we can't have 3, 4 because 4 would overlap into 1. Even if you put 1 down here, if you try and label it 1, 2, 3, 4, 3 would be the shortest, violating a core Elliott wave rule. Let's have a look at the conclusion of that. At the weekly chart level, where cycle wave 4 is this point down here, so I've got a leading expanding diagonal here, a zigzag or possibly a flap, most likely a zigzag here for a deep second wave, an impulse for a first wave, a combination for a second wave, and an impulse for a third wave. So I'm expecting DAX may be starting on a fourth wave correction. The second wave correction was reasonably time consuming, so I'd expect the corresponding fourth wave correction may not be quite as time consuming, but should be somewhat in proportion so that the wave count has the right look. The second wave was on the shallower side. It's less than 0.5 the depth of the first wave, and it's a combination. So given the guideline of alternation, I'd expect the fourth wave to be a zigzag, most likely, maybe a double zigzag, and maybe more shallow. It can't be deep because this is the 0.618 Fibonacci ratio is back into wave 1 price territory. So to exhibit alternation in depth, it may be much more shallow than the second wave, which was close to the 0.5 ratio of the first wave. Zigzags and double zigzags are generally quicker structures than combinations, so it may not be quite as long-lasting as intermediate wave 2. When it's done, another wave up to new highs to complete primary 3, and then another big consolidation for primary 4, or a deep pullback for primary 4, and a final fifth wave up to the final target, which I'd calculate once primary 3 and 4 are over. Intermediate 4 may not move into wave 1 price territory below 10,807. Here's that McGee trend line, and here's how it's got overshoots here at the daily chart level, but it's not properly breached. So that's a pretty good line offering some good support. If DAX has a deeper pullback, look for really strong support at that line and watch very carefully how price behaves. If price moves strongly down and away from that line, something else may be happening for DAX. Maybe supercycle wave 5 could be over. When it is over, that would be one of the things I'd be looking for confirmation of a supercycle degree trend change. Absolutely not there yet though. And this is the alternate idea at the monthly chart level. My first idea saw supercycle wave 4, A, B, C, D, E, a triangle, but what if it was over here as a more quick zigzag that will fit? We could still have for supercycle 5, 1, 2, 1, 2, and now 3, 4, 3, 4, 5. Cycle wave 5 could still be beginning at the same place, and here's that McGee trend line again, drawn from this low to this low on the monthly chart on a semi-log scale. That's all from me with your trading room video update and a couple of opportunities for traders there. I hope that all of our members are having a fabulous evening, and I look forward to speaking with you next time.